on the daily, right? We see an overextended zone. Okay. We see a hard uptrend. Daily here. Sorry for the New York noise. We see that, right? We see price at a daily uptrend, and then we also see price at this level. Okay. Boom. One. Boom. Two. Boom. Three. Boom. Four. Five. Okay. Now, price has been rejecting at these zones. So, huge supply zone that we see in this area. All right. There's a huge supply zone that we see. Okay. And we also see price heading on the downtrend area within this zone. So, price should continue to fall, but we want to make sure that it falls completely. So we want to get a breakout of this. We want to draw another trend line. So you have two trend lines, which are here. You don't want to cross these over, but get them enough to where they stick, which is here. And then my main entry for this, I would like to say here, but also preferably here. Okay. Any questions, or does everybody understand that so far? Press 1 if you understand. Awesome. So I'm waiting for the break of this. And the reason why I wait for the break of this is because I want to see price break support. I want to see price break the support. I don't want to just see it break this point because this point is very close. I mean, you can do it from here to here, but also this is probably a lot better move. You can catch this move from here to here because it's very close within range. But I'd also be very careful and try to sell below this current structure, which is like here. This is the structure. I like to sell below here. Catch it here. Okay. And you always want to zoom in. You want to see like a farther perspective, but you always want to zoom in and then go down to lower time frames to kind of see appropriate entry or where the market is exactly going. So the next candlestick for the 3 hours opening up bullish. Next candlestick for the hour is opening up bullish, but it's consolidating. So there's no movement as of yet. Once we get a breakout of maybe this structure right here, we could start seeing price move a little bit more heavy. All right. Now there's that for Mexican peso. For gold is at 1791. So gold actually took a really big hit today on gold. And reason being is 25 points. Okay. 30 points. Well, not really a huge hit, but 25 points in the negative. So my stop loss should have been at least right here, right? So I'm in profit. Stop losses I'm getting out at 1774. If it moves too fast for you, you could do even 1772, okay? And price ends up collapsing, right? And so even if price ends up collapsing and you did 25 pips, okay, that's 25 pips right here. And then your next take profit is the next zone. So your next sell is the next zone, which is here. sorry, which is here, which is 82 points. Price then comes back up to this level, which I didn't catch this part of the trade, but price comes back up to this level and it ends up hitting the buy orders that were once eliminated and shoots up. Now that's fine because at the end of the day, yes, you did lose 25 pips, but you also gained, you also gained 83 points minus your 25. Okay, so in total you had like maybe 60 something pips, 62 pips that you would have gained on the 12 overall. It just comes with exiting out. Okay, everybody understand that? Did anybody trade the 12 today? Anybody traded the 12? Press 1. Who traded the 12 today and made money? Rodney. Okay, Rodney, go ahead. I'm going to unmute your mic and let you talk.
I'm unmuting it now. Hold on. His mic should be unmuted. Let me see. Everyone's mics is unmuted. Rodney, you could go ahead and talk. Rodney, are you there? I guess he's not. You could continue, Dimitri.
Still practicing, but it was a great success. Robert. Oh no, Rodney. Okay, Rodney Torres.
Oops, my bad.
Okay, go ahead.
Yeah, I traded the 12 today. And I took profit exactly where you said at that second level, that second key support level.
What did you do with the buy stop? How did the buy stop play out for you?
You mean on the 12? I never took a buy stop, to be honest.
Okay.
I waited because I saw news was coming, so I did it. I waited until news dropped to get in the trade. So I got in the 12 like at 7:30, so I got in late.
You got in late?
Yeah. Because I was waiting for news to drop because I thought it was going to be negative. So I thought it was going to be positive, sorry. So that's why I thought it was going to drop.
And then it went up. I mean, it dropped.
Yeah, then it went up after.
Also,
here, yeah.
Here wouldn't have been a good spot to trade it anyway, just due to the fact that there was a resistance level here. But I kind of wanted to chance it to see if it hit like at least in the middle. And you missed the middle right there. So it's supposed to be 25, 25 points. It's supposed to be here. Honestly, that was supposed to be the buy stop. It would have hit right here. That's what I was kind of hoping to aim for. But it stopped right on the close of this candlestick, which I should have got out because there was resistance previous here, and we could have just capitalized off the 12 this way, and that would have been it. And now we're at the 00. We're at the 00, okay? Now, let's get ready to look at the 00. So we're gonna go over two things today. We're gonna go over 00, we're gonna go over 17, we're gonna go over 15, and we're gonna go over 22, 23, and then CMP, okay? I'm gonna sum that up real quick, all right? Now, 00 is the break of the high and the break of the low, okay? And I'm gonna show you what 00 did these past few days, okay? 00 candle the past few days did this, okay? This. All right, It has to break the high or low of the OO. Now let's zoom in. We're looking at this, let's zoom in. All right, let's zoom in. Now let's look to our left. This is the OO. I want to look to our left. OO. Price has to break the high or low. Now this is resistance. This is a resistance area. So if anything that if we buy, we want to buy past here, this level, right? Because this is like a very clear hard resistance. Boom, 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 boom. So we want to buy either at this level to the next level, or we want to buy here to the next level. Okay. Look how this plays out. Okay. Boom. Price wicks down, wicks down, wicks down, down. And I'm showing you both the scenarios. Okay, let's see how it plays past here. Oops. Cool. Okay, so you see when price is near the resistance zone, it's a little bit harder to kind of get an edge. When you're trading the OO, it's a little bit harder to get that edge. But if you buy right above where the price is, and then you trade it to the next resistance zone, look how much easier it is to kind of get into that zone. Versus here, it struggled a little bit due to trying to respect the resistance. Okay, so that's one OO that we see. Let's go to the next OO. Okay, so that's one OO that we see. Here's another OO. Okay, so you want to look at your support. Look at your support levels. Draw as many support levels as you can. Okay, this is a support zone, right? Here's a support zone. Here's a support zone. Price broke here. There's the vulnerability here. Okay, vulnerability here. Okay. Now where's the OO we were just talking about? Right here, right? Right here is another OO. Okay, so this is another support zone. Because price respects support and resistance. Right, this is the OO. $40. See why this worked out a little bit better? Yes, this OO was very close to comfort, but at least if you were trading into this resistance level, you're trading like the proximity from here to here is solid. It's 31 points. So you have to psychologically think, well, statistically, would it wick back in the event of this trade? Well, yeah, even if it wicked back, look how close it is to the resistance. So you have a higher chance. It's like throwing a rock into a river, right? You have a higher chance at 30 points. So 30 points here on the OO, on this OO. And I don't necessarily like doing it into a resistance unless it's very close, then that's fine. Unless it's like 30 to 40 pips away and there's not like a huge wick, like something like this, like if this was here, I most likely wouldn't do it due to the fact that this wick is here. But the fact that this little resistance here, this little buildup is here, it's fine because it's so close to comfort. And at this point, we see a resistance at this level and then price coming up, breaking out of consolidation and then coming to this level. So it ended up working out there. The OO. Now this one's good. I like this one in particular, just for the sole fact that before any of this happened, right? Let's just look at what's happening right now. Right? This is a resistance zone. So we want to write down the levels that have been respected. 1769. Was this level respected? Let's see. No, this level price ended up breaking through, right? It held, but it ended up breaking through at 1765, right? So at 1765, this level respected, right? This one was broken through, but in the past it was respected. It was respected, okay? It was respected here. It wasn't respected here, apologies. It went a little bit lower, but it came back up and it was respected here. So we can kind of see that price is strong at this level. This level is holding strong, but the fact whether it held strong or broke through doesn't matter, right? We see the activity that happened through it, okay? Now, price has to break the high or low. High or low. Okay, high or low. Is 23. Boom. Price has to break that level. All right. We see. Okay. You see this level right here. This is the 00. You want price to break the high or low. Now the low, we could probably trade this very closely to this level because the sole fact that this is an overextended zone, right? 1765, price is moving down to 1763. If we get here, we may see some movement. So what I would say is this: if you're gonna do the break up here of 00, at least put a stop loss here. So that is 21 pips, right? 21 pip stop loss. Right there. Your stop loss never got hit. It was very close. You risked 25 pips. You risked 21 pips to make 32, right? Now, if you want to keep trailing it, you can. Now, it's a little bit dangerous to trail it near this edge, just for the sole fact that it's so close. So for me, I do like the breakout. I do the breakout of this structure right here. Because look, right here seems pretty clean. Right here you could do, but then there's also these wicks that you want to take into accountability. I might do below. So boom, price goes back up. That, oh, so you want to be careful. Look at that. Right back to the spot that you're at. So boom, you took profit there already. Price hit. Okay, did it come back to this level? Nope. Never came back. Well, came back later on, hours later, which doesn't really count. By that time, you're already out of the trade because the 00 is not as respected as it was before going down. So now we're in a whole new trend. We're in the 12, so we're not even going to take this. So see how it was good to take profit here, and then instead of just scaling down into this level, yes, it did go down, right? Like it did go down to this point, but it had to come back up. It did all of this. Like you don't want to have to go through that, right? So the best thing is to just wait until it breaks out of here, and then you can go ahead and take profit in the next area, right? Everybody understand the 00 so far? Are you with me? Now, 22 o'clock, 23 o'clock. This is the time frame of consolidation, right? 22 o'clock, 23 o'clock, 00, all right? Price has to break the high or low. Right? So high or low. This is the highest point. This is the lowest point, but we want to do the breakout of here. You see that? Press one if you guys understand, if you see that. Okay, awesome. Now look at this. It worked. Why did this work? Because this is the OO, and we're not gonna take this breakout here, right? Because look at the conditions that are here. We're gonna take this breakout underneath this. Why? Because this is the OO, and we're not gonna take this breakout for the upside either, because look at all the wicks here. Look at all the dying wicks here that are here. So it looks like OO is gonna probably hit the downside, if anything, right? So we see, look, price turns around, it turns around. You don't even want to be right here. You want to be a little bit below that, right here, okay? Because you don't want to get caught in these traps. Right here, kind of gives you a little bit more room to maneuver. Okay, and you get a 34 pips. Boom, done, easy, right there. 35. You want to put your, I don't want to say you want to put it right where the OO is, but I mean, you can give it some room to do that. Did it keep going? Kept going, kept going, kept going, lower, 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 lower. Okay. Now, once this hits, once the OO hit at this point, okay, now you can draw a trend line. Draw your trend line. Okay. Because here is the breakout, and here's where you're taking profit, right? You're taking profit right here, right at the break of this. So at the break of this, you're in 50 pips, okay? Now price is gonna drop. Price is gonna drop more, right? Around 52 pips at this level, but there's these support levels. So could you trade into a support level? You could, but it wouldn't be necessarily ideal. So for me personally, I would say if you want to get the rest of the job done, the best thing to do, okay, is to trade it into this zone, right? And you want to look at every single zone, like you want to get the best break of structure that there is possible. So here, this is like the best break of structure that's here. You see that? Look at this. Boom. Like, yes, there's support here. There's a little support here, but it's not like, not drastic. You know what I mean? It's still right here in this area. So boom, once you sell right here, nice markup, done. You can let that bad boy ride. Let it ride, right? And where are you gonna let it ride down to? The next zone. The next zone is here, okay? Well, actually, this is the next zone. Held is the most important, right? But here, the reason why I say here is ideal is because this had the support, it broke through, and then it came here and held. Okay, that's why it's good. All right. Now let's see. Okay, and even if you did here, right? Whatever it hit, but even if you did here, this level, your stop loss is in profit. Okay, you're trailing down your stop. Okay. Oh, boom. Look at that. 282 pips. Okay. Now, let's go check here. Let's go check the OO on current market. This is the OO. Same concept. I'm not taking the breakout of here as soon as it hits. I'm taking the breakout of here. Okay. I personally believe that gold could still go up. Gold could still go up because look at the consolidation phase it's on right now. It's on a heavy consolidation phase. Look at that. See that? This area is still heavy. This area there, 1748. That's still heavy. Okay. Consolidation is also rejecting off of here. But you gotta be careful because anything can happen, right? Right here, boom, look at that. Price broke through here and then it came to this level, okay? I personally want to see price hit around the 18. So 1810 is how many points? And it's 163. We just want to see how it reacts at this level. Yes, it could hit up, and it could hit 148 points, but let's focus to see what it does on this level. So on this level, it's rejecting right now. It is rejecting. For how long? I'm not sure. Now, do I think there's going to be a retrace? Possibly. I just think that we need to get in a little bit lower, like around the 1789 level. 1789 level, stop loss is around 1793. So maybe 40 pips. Are you willing to risk 40 pips? Or even, are you willing to risk 23 pips? Tight stop loss to make 72 pips, possibly, because this is a resistance zone here. This is the resistance zone here as well, and this is a resistance zone here. So essentially, should you enter it at 1786, 1790, or 1788? Because the crossing of 1788, right, like, there's 28 points. I like to usually stay closer to the 00, but the crossing of this is going to lead us into this territory, right? A bigger territory of almost 60 pips. So what do you guys think? Any thoughts? What do you guys think? Anybody? Oh, is going live too. Look at OO. See, there's a resistance area there. So you definitely want to be careful on the OO. But I also see, despite there being resistance, there also is body wick volume. Right, we see price hit, price hit. And look, pardon me. We could see price even hit here as a short milestone because this huge support zone that was here, this huge turning point. And then when we got consolidation, price came up and it's looking like it's ready to go. What do you guys think? Questions?
Hey Dimitri, quick question. You wait until the OO closes or and then trade after the OO, or you trade the OO?
No. You wait until the OO, the OO is here. Usually take the high or low of the OO. The high or low of the OO. Which means,
Okay, so you trade the candle after the OO is closed. Okay.
like, once it's broken. Sometimes you can trade it to the next level because the 22 o'clock, 23 o'clock is blast off. Preferably, I like to wait until it's broken.
Okay, thank you.
Okay. Everybody understand the OO, yes or no? If you don't understand the OO, press 1. 2 if you don't. Okay? So you do. You guys understand the OO. Okay, now we're going to go over the 17.
Why me?
Guys, can you mute your mics, please? Elias, Elvin, please mute your mics. Elvin, can you mute your mic, please, sir? Now 17 o'clock, okay, which we saw happen here. I like the 17. Look at this. This OO looks like it's going to tank. 1790. I like the 17. Okay. I'm going to tell you why. 17 is a little bit hard, but it's a reversal strategy. And I'm still testing the data on it. But I like to find 17 at a lot of highs or a lot of lows that have a certain level of resistance. So this is, look, this is one, 16, okay? 15, 17, okay? Right? 17, you can do market execution, but you want to find really where to enter. Like sometimes you don't want to enter like right here. You might want to enter a little bit below the previous lows of this. See how it goes? Boom. Look how that happened. Price came up to here. Price came up to here on the 17. So when you saw this, you'd probably be like, oh my God, right? 90, 100 pips. But it ended up reversing. Let's see how far it reversed. Right here. Now taking the 17, you also want to be very careful, right? You go on the 4 hour, right here. This would have been a lot better 17 to take because this is 13, 17. You could take it at the break of this structure because you have to think the price is still at resistance. And yeah, you would probably be, 58 pips, but you want to take it at the break of resistance. Let's say like right here. Right here is solid. You could take it. Look at that. Actually, it was even more pips. 96 points. Okay. The 17 usually lasts for a very long time, so you could sometimes take it for a long time. But I like to aim for 50 pips the most on 17. And I'll give you another example of 17. Okay, and just show you how it is. Okay, you want to find resistance and support. Okay, 17. This isn't a good 17. Not a good 17. That's a good 12. Good 17 is something like this, right? This is great. Okay, let's look at this. 16, 17, and then price reverse. Okay, on 17, this was the resistance level, right? We want to spread it out. We also want to see what we're looking at, right? 1834 was the highest amongst that. 1832. Right? Okay, here we go. Look at this, 17. So 17 is a reversal strategy, which means at 17, we're expecting reversal from the high or from the low. So 16 happened, 17 happened, and then we see 18 came into the effect, right? I like to do it right below the 17. It could be on the 17 or at the 17, but where's a good place to really take the 17 is the 4 hour, right? Because you see here, boom, this is the 17 right here. Usually when you can take it at the bottom. It always usually works at the bottom. The bottom of support or the top of resistance. So the bottom here would be, this is on the bottom, so you want to make it a little bit lower. Right? Like right here where the resistance is. Okay? Right here on the bottom. Then price drops. Get 31 points into profit, which is fine. Let's say your target is, I'm gonna find a good solid. Here is a good target because it's a support zone. So that is technically a good target, but if you wanna just stretch it out a little bit more, you could do here. Just know that you're gonna get some wick back, okay? But it's not gonna be terrible wick back because from where you entered was here, so it'd be like 26 pips, all right? And then your overall profit is 100. So the thing about 17 is it moves a lot like 12. It moves a lot like 12. Everybody understand?
So I do have a question. For the 17, would you mark that during the 16 or like right near the end of 17?
I'd mark it right on the 16, right below the 16, right below the 17 on the 4 hour. Right below both.
Gotcha.
Got it?
Yes. Also, would you be able to trail actually trail your profits, scale it? Sorry.
You can always trail your profits in any trades you do.
All right. Thank you.
No problem. Right, now we're gonna move on to the next. Everybody understand the 17. So you wanna find a consistent, consecutive hits of price. You wanna find price hitting a number of times before you enter it. Now this 17 is whack because this isn't this here is right in the middle of a trade. You wanna find it at the top or at the bottom, okay? So 4 hour, you can go to the 4 hour if it's a little bit easier. You want to find 16. Well, I like that. Oh. And you'll find it like somewhere near here. No, I mean this is actually pretty good. It's not that bad. But preferably I like to just find it on top. Right here is good. It's good. This is good. You just gotta, add some lines to it to kind of see where it's heading. But here is good. You enter in on the 17. Boom. Oh, 100 points. Garbage. You want to find like one at the top of here. This is perfect. Like at consolidation, those are the 17s you could enter. This, that would be a good 17. This one's good, but I like to find more consecutive hits. The more hits that we have on resistance, and usually I like to take it at resistance and not so much as support. But the more hits you have on resistance, the better. Here was good, but it was just like 17, 60 pips. Like, it's okay. I like to find more hits. The more hits that I have, like if I had something like this that was like boom, 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 one after the other, then I would think, okay, you know what, I can enter on here. Like where this is, like something like this, great. Or even this, consolidation, you know. Like if there was a 17 here, solid. Okay? Perfect. So that is the time frames. Okay? We're gonna go into settlement. How many people have heard of settlement that are new? Press 1. 2 if you already know what settlement is. Perfect. Right. Settlement is the price that all traders agree on at the end of the day. So you can go to CME Group, which is the Chicago Mercantile Exchange Group, and you can type in gold settlement. Once you hit gold settlement, you can go here. And you can see the settlements. They'll say Wednesday, Tuesday, Monday, Friday, Thursday. Today is what? Today is Wednesday?
Yes.
Okay.
Alright.
1794. 1793. Okay. 1793 is the settlement for today. So all traders agreed on this price. 1793. So we could trade it from settlement or at settlement. Now we go here and we see what was yesterday's settlement. Sorry, yes, today's settlement was 1793, right? Okay. And then yesterday's settlement was what, 1758? So 1758 is yesterday's settlement. That's here. So this is the price that all traders agreed on yesterday. So this would have been a good reference because then we would have saw, okay, this is a support level. Right, we would have saw price is either going to hit this level or higher, and ended up hitting this level. Okay, so this held was a very good support level. Now the next level is 1753, 1793. Let's see what the level was before that. The level before that was 1754, so it's even lower, right? So these are the levels, all the levels that traders were agreeing on. 1756. All these levels were levels of support, which were interesting because now we're looking at this level, which is the level of resistance. So we may see some resistance here on the settlement level. Okay, that's the beauty of settlement.
Sorry, Dimitri, I don't understand. How do you trade the settlements?
Like I said, you can trade it from support, or you can trade it from resistance. They act as support and resistance levels. That's how you trade it. Yeah. Yeah. That's how you do it.
Dimitri, I have a question to you about the settlement levels.
Yeah.
At what time of the day does the settlement appears on the web page you were in right now? At 4, when market closes?
I'm sorry, I didn't catch that.
At what time of the day does the new settlement level appears?
At 5 p.m.
Okay.
Questions? Questions, read all about it. Oh, for GJ. $110 points. Okay, so you guys can use these levels to trade. And what I like to do is I like to mark up each and every single level from today to the previous day back to Monday to kind of get a clear perspective on where the market is moving. And so today's level is 1793. Maybe tomorrow's level might be something else, right? So we're just waiting to see what price is doing at this level. And we know that this 1793 level is a level of resistance, right? Right? Everybody understand that? It's really that simple. This is how simple it is to use this settlement levels. So you can find it, okay? Now, what was I gonna say? What is the next level that we're gonna be looking for? You can do these levels with all kinds of pairs. It doesn't really matter. All right. Now, one thing that I wanted to put you guys onto really quickly is these levels. Okay. ATR-based pivot points. Okay. Now these levels are great. What they do is they are essentially almost like deviations. Your period open should be red. Black, white. And you could separate it out. Okay. And you could make these levels useful. You can trade from these levels, right? Now, each level here that you look at is basically, this is the opening level. So this is the opening settlement per se. This is the opening level, right? With deviation levels, every one is a target. So every level is 0.5 from the next level. So from here to here is 0.5, from here to here is 0.5, and from here to here is 0.5, right? Now, 1, boom, half a level. 2, boom, that's the next level. Boom, 3, the next level. Okay, 1 half a level. Boom, 2, next level. 1 half a level. Okay, what do you notice about each level? Like which level is more accurate? The level that is half a level. So 0.5 is the most accurate level. So that's the one that I preferably aim for, 90% of the time. Even when you see here, you see, look, price almost hit this level, but there was resistance there. So this is the level, boom. Then price opened up and it hit, boom, boom, moved past that. So it moved half a deviation, 1 full deviation, and it was close to moving 1.5 deviation, but it didn't. Okay, so it moved about 1 deviation. 1 deviation moved. Okay, and here we see half a deviation. Okay, here we see half a deviation, half a deviation, half a deviation. Okay, here we see half a deviation. Okay, here half a deviation. All right. Now here is half a deviation, 1 full deviation. Okay, half a deviation, 1 full deviation, almost 1.5 deviation. Okay, but the accuracy is the half a deviation. Okay, you see that, right? Sometimes you get 1 full standard deviation, but these levels are just, you can change them. You can change them, by the way. So you can change it to 1 week, to look at a period of 1 week. You can change it to a period of 4 hours, which I don't even necessarily recommend, but I like to trade it to 1 week. And I can see what the level they're doing on a weekly basis. Okay, now look at this. Here is the OO, literally at a settlement room. Here's the OO. Okay. All right, OO. Sorry, this is OO. Okay. And here is the resistance zone. So it's way too close for comfort. So price has to break the high or low. It rejects off of this zone, which was obviously easy. It was going to do that anyway. And then at the break of this zone is where I'd get in for the OO. I know it's a little bit late, but that's where I'd get in. A little bit lower than that though. Okay. And then we target the next level. Boom, 50. Okay. The beautiful thing about the OO and 12 is statistically these levels change. So there is a 90% chance on any given day that price will hit this level, hit half a deviation level. Okay. Now, here, the second deviation level is maybe a 30% chance. And then the third deviation level would be like almost like a 10% chance. So there's, you have to weigh the statistical probabilities of those levels. Now, my time is up. I could go a little bit over, but I'm going to finish and continue this tomorrow with the levels. And I'll show you how you can use these levels in conjunction with major price action, the time sequence, and how you could, get the most out of them. But the tool is on there. It's MCBWI. It is the second tool. And I'm going to show you guys how to get it cracking. So tomorrow we'll be having a raw price action day. We're going to go over the levels first thing and how we can use the time strategies in conjunction. And then I'm going to go over some major price action tips that you can use to spot good entries and set yourself up for success. So like I said, if you like today's course, please tag me on the gram or, go to the Facebook group. I'd really appreciate it if you guys left some testimonials.
Did you guys enjoy the class? Put one in the chat if you enjoyed the class today.
Yeah, I'd appreciate some testimonials, and if you enjoyed the class, you could go ahead and put it.
Thank you, Tahir.
You can go ahead and put it here in the group, right? You can go ahead and put it here in the group. You can comment, and that will be much greatly appreciated. So thank you everyone that got on the call, and I appreciate you. Thank you guys.
All right, God bless you. See you on the next one.
Have a good night, guys.